Everyone, it is officially a bear market, and we're here to celebrate because we watch this channel. We believe in lower prices. We are like Big Lots and Walmart. We want lower prices all the time in our investments. It is hot as hell in here. I'm getting this thing off. Oh my God, that's hot. All right, guys. So the bear market has hit. We've been talking about a bear market for a while. Hasn't happened. It has finally hit. So what does that mean for you? Guys, if you're new to this channel, please embrace what we're about ready to say. Just imagine a favorite thing in the world to buy. Do you want to pay more for it or less for it? You, of course, want to pay less for it. That's the same thing with us. We want to pay less for the companies that we love. We want to pay less for our investments. The less you pay for something, the more money you make in the long run. It just makes perfect sense. So we embrace bear markets. You might sit there and get scared about it. I get it. You see your account going down every day. Stop looking at your account. It's that simple. Even me, I find myself when I look at my account too much, I get too attached to the number. Stop doing it. Check once a quarter. If that, you probably shouldn't even check ever. Just stick with your plan. Guys, here's what happens. This is the stock market value over long periods of time. Oh my gosh, this is falling. And this is how stocks go. Okay? If you dollar cost average, you pay every single month, every single, whatever you're doing, you're going to overpay sometimes and underpay. But over time, you're going to pay this amount. And that's the key here. Your goal is to pay this amount. If you keep jumping in and out based on how you feel, most common questions I get, like, Paul, what do you think is going to happen here? I have no idea. And you shouldn't either. And you shouldn't try to care. Your job is to save month in and month out. Week in, week out, quarter in, quarter out, whatever it is, stay in the game. Now, there's a lot of fear out there. Why? Because all of a sudden we have inflation. And everybody who watches my videos in the past, I always said, guys, I don't know what's going to cause markets to go down, but it'll be something we don't even see yet. Now, I talked about inflation in past videos. Please, trust me when I say this. We keep all our videos up. You can go back and check it out. We said, how can you possibly put this much money into the economy and not expect prices to go up? How can you expect minimum wage to go up, but not have inflation? Of course it happened. What's that cause? It causes the Fed to raise rates. In the late 70s and early 80s, we had a thing called stagflation. And that's a big concern now. What is stagflation? It's a mixture of two words, stagnant and inflation. A stagnant economy, not growing very well, if not actually decreasing, and inflation. It's a very, very tough world to be in. It hurts a lot of people. If you are the person who saves your money and lives well below your means, you'll probably do just fine, if not great. You'll be able to dollar cost average. But I implore you as an investor, study after study has shown that when you try to get in and out of the market at the right time, you lose over the long run. Don't do it. If you insist on buying individual stocks, put the vast majority of your money into low-cost index funds, month in, month out, dollar cost average, and learn a process like we teach here on this channel to sit there and buy individual companies at great prices. It's very, very possible. Just in the last week, I've seen prices plummet on stock. In the last year, I've seen some of the companies I love fall 50, 60, 70%. And I started acquiring shares of them. And guess what? They're going to go further down. And guess what I'm going to do along the way? I'm going to buy more. I get excited about this. If you look at my Instagram account back to the COVID days, there are pictures of me kissing the screen when stocks were down 8, 9%. That is the mentality to have. During stagflation, Jerome Powell, he's going to come out tomorrow and make an announcement. A lot of people are calling now for 0.75 increase in interest rates. First of all, it's going to be 0.5. I've even heard the 1% possibly happening. Is it going to happen? I have no idea. But the bottom line is, do I think we're in an upward interest rate environment? I absolutely do believe that. So if we're in an upward interest rate environment, interest rates work to drag down stock prices. Because if interest rates go up, you need a higher return on your stocks in order to get a return. So what do you have to do? You have to pay less for them. That's why they drag down. That's why when you saw 0%, stocks flying. Why? Because people said, hey, I can get a dividend of 2% from the S&P, then 1.5, then 1.2. It's better than 0%. It's not logical, but it's how humans react. So what is your job? Your job is to be patient, understand the long term. Go back in history. Go back to 1900 to now. Look at the stock market back then to what it is today. And in that time, guys, we've had rates as high as 15, 16, 17%. We've had rates as low as zero. We've had world wars, 2 of them. We've had assassinations. We've had 2 big plagues. We've had every possible terrorist attacks out the yin yang. And guess what? Stocks go up over the long run. Why? Because if you believe in the U.S. economy, that is what's going to happen. If you don't believe in the U.S. economy, I don't know what to tell you. But if you believe in the U.S. economy, you should want stocks to go down. Change your mindset from, oh my gosh, this sucks, to my gosh, this is so awesome. I can now make more money to put into stocks at better prices. If you love a stock, if you like a stock at 200, you should love it at 100. If you don't love it at 100, then I would ask you, did you really love it at 200? Or did you like the fact that it went up to 200? There's a very big difference. When I love companies, I look at the companies, I look at their financials, and when they fall in half, do their financials fall in half? No, usually not. So what do? I'll buy more. And my goal is to dollar cost average on the low side on individual stocks that I love. But when it comes to stagflation, when it comes to inflation, and your job is to be a very, very smart investor and consumer. Don't overspend. Save your money, live within your means, because the goal is that when bad times happen, you might have to pull back a little bit in certain areas, but you'll still stay invested at the best times possible to invest. Go look at charts. This is the chart from 2000. That's the chart from 2000 to now. I went a little abbreviated. You would have wished, even here, going down to here, you'd have wished you bought there when it's over here. You still would have gotten an okay return on your money. But guess what? All along the way, if you kept buying on the way down, you'd have bought at great prices. So instead of buying only here, you'd have bought an average of here because you'd bought all along the way. You'd have doubled your return just by doing that. Doubled your return just by saying, okay, my plan is to do this. 2006, friends of mine sat me down. They just graduated from college 2 or 3 years before. They started their home and they were saving their money. They said, Paul, stocks were flying high. Paul, we want to meet with you and discuss savings. I said, great. I told them to do exactly what I just said here. And I actually said to them, what would you do if stocks fell in half? And the wife said to me, well, we'd buy more, wouldn't we? I said, perfect. You get it. Good for you. Fast forward 2 years later. I got a frantic email from her. Paul, I'm scared my money's going to zero. What are you doing? And I wrote back, I'm buying more. She said, you are? I said, remember our conversation? She said, yes, but this is different. I think it's going to zero. They got out of stocks. Fast forward, the S&P ended up bottoming at 666. They sold out at about 900. So they look pretty smart there. When did they get back in? 1,200 to 1,300 is when they started to buy back in. And you better believe they wouldn't have bought back in. So all along that time, they could have been buying and buying and buying and buying and buying and buying and buying. When they finally bought back in, they'd missed out on the doubling of the market. They'd missed out on 33% gains from when they sold out. This is not a one-time thing. This happens all the time. When I ask investors today, what would you do if stocks fell in half? I'd buy more. Very easy. But the emotional part is the hard part. So what can you do to fight that? Well, very simple, guys. We've got a wonderful community. Oh, look, I have a message in that community. We have over 12,000 people who have bought our software. And a lot of them in our community talking about all these everyday examples. I love seeing the messages in there when I see, guys, this is what we're taught to embrace. We love red days. We embrace these. This is the community we want to be around. Because it's a lonely road out there. When I have these thoughts of my own, it's like, well, am I just the only one who thinks this? But when you join a community with thousands and thousands of people and they're all saying the same thing, it's much easier to believe all of these things and make the right choices long-term. It is constantly repeated in these chats. This is what we are being trained to do. Be happy when things are going bad. Stay the course. Take as much emotion out of it as possible. This is the hardest thing to do in investing. Investing is not about the numbers. It's about 10% about the numbers, 90% about the emotion and how you stick with it. Join this community, and this is how you'll get through the tough times. If this resonates with you, click the link above for the upcoming recession and how this could be the opportunity of a lifetime. I really believe it. Thanks very much, guys.